Alright, so boom, welcome back. We back, niche money mastery. Episode whatever. I don't even know which episode we are right now. But we back though. As requested, we're going to go over the strategy, the niche money strategy that I use on a daily basis and make thousands of dollars. Literally. So what we're going to go over today is basically just the strategy overall. Basically, combining everything you've learned before through all episodes, combine them into one strategy, into one video. I even bought a replay for you guys today so I can go over a past trade I did last week or the week before. The market's been kind of slow recently, so I haven't really been trading too much. Still make money though. Let's lock in for real, let's not waste no more time. This right here, these two diagrams are literally my strategy. Literally my strategy, entailed to the T. So obviously the one on the left is for longs and the one on the right is for shorts. You only enter longs when? Let's see if you've been learning. Only in bullish markets. I bet you didn't answer that, but if you did, props to you. And you only enter shorts when we're in bearish conditions. As we know, we target liquidity. Liquidity is the main thing, and that's everything behind a trade. So for this, as you can see, when we're in bullish conditions, on the lower time frame, we want to see a structural shift. We want to see liquidity taken, or we want to see price enter into a higher time frame fair value gap, and we want to see price continuing to the intended direction. So this, for example, would be on a 1 minute, 2 minutes, 5 minute, whatever chart. Whatever lower time frame you use, I use the 1 minute. You see, for a small moment in time, this is what they call a little jeweler's swing, where it's in the opposite direction of where it's intended to go. So we'll see it start going downwards. This is bullish conditions. So it's going to be heading downwards and it's going to try to pull back to a higher time frame bullish fair value gap or a structural low. Yeah, a structural low in bullish conditions. So once it does that, it either will sweep that low or as a fair value gap, it enters that fair value gap. Then what we want to see, this is the important part, we want to see price push up, break above the last lower time frame high. So obviously it's going downwards in this case, and we want to see price shift into the opposite direction. So when we see that now, boom. All right, we have a little confirmation that yeah, price can go back into the intended direction. We're going to take the risk. We're going to put our full portfolio or full balance. Maybe we win, maybe we lose. More like we're going to win though. We need to see obviously some volume. Then we're going to see price pull back into a fair value gap on the lower time frame and push back to a, whichever target you have. It can be any target, it doesn't matter. I don't judge, you get me? Whatever you're comfortable with, just make sure you do it with sense. And then it's opposite for a bearish market. But I'm going to explain all this right here with all the 5 steps. So please take your screenshots. I'm going to give you 5 seconds. All right, you got 5 seconds. Cool. So step 1, align the bias with the higher time frame order flow, like I said. So higher time frame being the 4 hour, the daily, 15 minute, 30 minute, 1 hour. Mainly the 4 hour or daily. That's the main higher time frame. That is what was going to decide if we are bullish or bearish. And all we need to remember is that on the 4 hour chart, we can see what we need for the day, right? So on a 4 hour right now, as you can see, what can you see? What kind of conditions are we in? You can see that we are in bearish conditions. We've been going downwards, right? What we're only looking for are shorts. We're not looking for longs until our previous high is broken. In this example, until this high right here is broken, on the 4 hour chart, I am not looking for any kind of bullish moves. I don't care if I miss out on days of trading. I don't care if I don't catch a trade for however long. I'm only going to look for shorts. If I see a short setup play out, that's what I'm going to take. Simple as that. Keep trading simple. So step number 2, only look for entries when price is within a higher time frame fair value gap or at a structural low or high. Remember, fair value gaps are always formed within the market. Price cannot only go in one direction. Price goes down. In this case, it goes down. It has a pullback up, and it goes down, and it pulls back up, and it goes down, it pulls back up, down, pulls back up, down, and it's pulling back up again. So what does it pull back to? It either pulls back to liquidity or fair value gaps. So in this example right here, we can see clear as day, this big 4 hour bearish fair value gap right here. price had pulled back to it, and it's more likely going to continue heading down. So it might pull him back to this fair value gap to head back down to these lows down here. And this is just from a 4-hour time frame perspective. I don't care with all that. I just look for my moves as a scalper within a certain set of hours. Or it can be on the 1-hour time frame. It can pull back to this hourly bearish fair value gap right here. It can pull back here, right? On a hourly time frame, as you can see, price had pulled back to where this high right here. Price pulled back to this high, this hourly high, right? And it's continuing to reverse. That could have been a setup. However, this was on Friday. If it was any time out in the week and we saw a setup like this, we would more than likely sell, because one, it took liquidity and it also went into this 4-hour bearish fair value gap. Two big confluences. Price is bearish as well. We'd expect a setup, but this was on Friday. Look on a lower time frame structural shift that aligns with the higher time frame order flow. Remember, lower time frames are from the 1 minute to the 5 minute. So we're looking for some structural shift on that time frame. So what we're going to do is go into the 1 minute time frame. And as you can see, on the 1 minute time frame, if you were to look like this, price look like it's extremely bullish, right? Keep in mind, I'm never buying in any of this in any time during this time. But look, what can you see? This is just from Friday, for example. Don't worry, I will show you a proper example of a trade later on. I'm just giving you the gist of what I look for my setup. So as you can see, price is pushing up. This is the Judas swing, right? The last low created was right here. So the last low created on the 1 minute time frame in this bullish structure. Cool. How do we identify that? As you can see, price is pushing up, pull back, push up, pull back, push up, pull back, push up, pull back, and then it broke this high over here. So this is a new high, and then it pulled back and broke structure right here. As you can see, it broke structure on this line. So we call this, you can type in market structure shift, you can type in CISD, doesn't matter. When it reversed, when it broke structure back to the downside, very impulsively, we can see that price started to push down. Price started to push down after all these confluences, and we could have possibly taken a trade, but this was Friday at sometime in the evening outside my trading hours. You can look on step 4, which is also a next confirmation for the lower time frame. Make sure that the structural shift is followed with good volume to confirm bias. So when we change back structure, we want to make sure that price is pushing down with volume. It's not taking its time. There's heavy bearish displacement. As you can see, there's good bearish displacement. And we need to enter on a pullback to a lower time frame fair value gap created due to the volume shift. So obviously, on whichever time frame, imbalances are caused by big moves in the market. So as you can see, when price changed structure right here, it created a fair value gap, right? This is just a 1 minute fair value gap. As you can see, the gap between 3 candles, boom. Price pulled back and started to push down from this fair value gap. So that's basically all the steps of my entry. Actually, that's the niche money strategy right there. But what I'm going to do now is show you a real live trade and how I entered, how I decided that, okay, I would take this trade, what determined my bias, all that and more. You get me? So I'm going to look on that trade that I took. When was this? When did I send this trade in my Discord? Oh yeah, you can join my Discord, by the way. No, you know what I mean? Free advertisement. Remember, I show all my live trades in the Discord. You can pay for it if you want to. If you don't want to, cool. I'm teaching you everything here for free. Hey, it's only $50 a month though. Literally, only 50. I think it was, yeah, this was the only trade I took the week before. Yeah, the week before I took this trade. This is the only trade I took for the week. I made like, how much did I make? I made like $3,000 on this trade earlier. Go pocket watch now. You hear me? Keep in mind, I don't know too much about, you know what I mean, this replay thing. So I'm gonna try my best. So what we're gonna do is go back to Thursday, November 13th, yeah? Let's do this. Alright, cool. We're learning together, yeah? Yeah, start from here. Alright, boom. So what can we see right now? How did I take a trade this day? So, if you look on the 4-hour chart, I would like this big ass watermark on my screen, bro. So, during this time, it was a bit bullish. Why was it bullish? So as you can see, markets are pushing were originally to the left in a bearish structure, yeah. However, as you can see, this at this last high right here, it was broken on the 4-hour time frame. Now remember, when I see structural shifts like this on the 4-hour chart, my whole bias changes, so I'm only looking for longs. However, I took shorts this day. I'm gonna show you how I took shorts this day. You get me? So originally, yeah, I was looking for longs here, more like aiming for these equal highs right here, because that's major liquidity. We're very close to it. Equal highs are major draw on liquidity. The last low created, where I would look for shorts was right here. So once price had crossed this low right here, my bias would shift. My bias would have changed if this low was broken. Remember, now it's in an uptrend. It pushes up, then pushed down, then it pushed up, creating this new high. And if that means this is the last low that is valid. It's also this new week opening gap. A new week opening gap is, as I said before, I don't know if I stated before, I'm pretty sure I did though, is whenever the price opens back, the market opens back on a Sunday at 5 p.m, more than likely it's going to cause a gap. That's because over the weekend, there was still some sort of, action, things going on in the economy that could have boosted the price, and it never really covered for the weekend. And that's a very good spot where prices more likely to pull back. So despite it being bullish during the week, I still had caution that, all right, every time a new week opening gap is formed, it's more likely going to pull back to fill it, because at the end of the day, it's an imbalance. Just like fair value gaps, price is more likely going to fill it, especially new week opening gaps or new day opening gaps. So whenever you see these gaps, these empty gaps in the market right here, just know that it's a new week opening gap. These empty gaps and price is more likely going to pull back to it. So even if the market is going in the opposite direction, just know there's a likely chance that price pulls back to it, whether bullish or bearish. Bullish stay, we can also see that there's this 4-hour bullish fair value gap right here. Let me change the color. I hate these colors. This is what you guys have to deal with when you open an account, bro. 4-hour bullish FVG. I label all my things. Anything else of interest? Not really. I mean, there's an order block right here where price had changed the state of delivery. Move this to the right. Yeah, so alright, so there's a 4-hour order block right here. And yeah, so that's on the 4-hour time frame. We can go into the 1-hour. What do we see on the 1-hour chart? We only focusing on the current leg in the market. To continue bullish, price would have to stay above the area of liquidity. Price would have to stay above, because remember, this is the 4-hour low. Now remember, I want to trade at 9:30 New York time. Make sure this is on New York time. Yeah, make sure it's on UTC -5 New York. And we want to trade at 9:30 on this chart. Remember, I want to trade NASDAQ as well. Never disregard that. It can apply to other things, but I only trade there in the New York session on the NASDAQ. I really don't know what to. Oh yeah, it's right here, isn't it?
1 hour later.
Bro, how do we?
2 hours later.
I'm lost, brother.
Tomorrow for sure. Eventually.
Oh, I think I figured it out. Alright, let's go to the... So as we can see on the 4-hour, as I said, if price breaks below on this candle, for example, during the 9 o'clock open on New York, that's the only time I trade, 9:30 to midday every single day. So during that time, this is during the 4-hour candle. I can see that the shift had shifted. Yeah, I was here. So we can say 4-hour CISD. Cool. So we had a change in state of the... Oh, what the hell? Alright, cool. So we had a whole change in state of delivery, heavy push to the downside. As you can see, the price is more like, pushing towards the new week opening gap. So that's our target right now. As you can see, more than likely, price is pushing heavily bearish. It didn't remain momentum. It didn't keep momentum to the upside. So now we can go down to the 1-hour time frame. So what are we focusing now? We're focusing on PD arrays that's going to push us to the downside. So right here we can see there's a 1-hour bearish fair value gap form right here. 1 hour bearish. Or it can come back to this hourly high right here. But remember, at the end of the day, it only comes to a fair value gap or a hourly higher time frame structural high, right? So we can put hourly high. Either it can cause a liquidity sweep right here or come back to this bearish fair value gap for continued momentum. 15 minute. It's at 9:45. 9:45, there was a 15-minute bearish fair value gap formed. 15-minute bullish means bearish fair value gap. So now we have these 3 things to look at for price to pull back to, and then we can get our setup out to it. Cool. So we patiently wait. If price reaches this new week opening gap before us, so be it. We just missed out on it. We always need to remain patient. Alright, now let's continue playing it. Because now when the 15-minute bullish bearish fair value gap form, we need to see some kind of structural shift. It happens from this 15-minute bearish, or it happens from this hourly bearish. So as we can see, on the 15-minute, price had broken above the fair value gap. However, it had entered into the order block, this 15-minute order block. So we can 15-minute order block. So remember that these are still relevant structural points. So price entered into it. As we can see, when price had entered, price had caused a change in state of delivery. Important part of our steps. As you can see, price entered into a higher time frame PDRA, where that be it wasn't a fair value gap, it wasn't a high, but it was an order block, which is just as important. So now that price changed the state of delivery, now we look for a 1 minute fair value gap to enter based off of. None was formed so far. Go to the next candle. Alright, now we can see one was formed right here. So now we want to see price pull back into this fair value gap to get a entry. Stops above the high as always, and then our target is going to be the new week opening gap. That's the perfect. Remember, price had pushed towards the new week opening gap, but didn't push into it at first, meaning price is giving us some time to enter. So as you can see, price had tapped us in. We'd enter as soon as price entered into this fair value gap right here, formed from the bearish displacement. I just want to go back to the steps so you guys can realize the mastery at work right here. Align bias with the higher time frame. You saw that the market had shifted on the 4-hour time frame, becoming bearish, yeah? So now we're only looking for shorts. Also, we only look for entries when price is within a higher time frame fair value gap or a structural higher or lower high. I forgot to put in order block. Never forget the order blocks. You hear me? Higher time frame order blocks also count. So you entered into that 15-minute bearish order block, and what happened next? You look for a lower time frame structural shift that aligns with the higher time frame order flow. Look at this. Price was, obviously in a little uptrend during the New York Open, yeah? What we're waiting for now is for price to shift back to bearish to continue with the momentum, continue with the order flow. We see that there is continued momentum. This was a great bearish structural shift. There's only bearish candles with pressure. Then, what's next? It was followed by a good volume. It confirmed the bias, and now we enter on a pullback to a lower time frame fair value gap created due to the volume shift. And that's where this fair value gap was formed. We got tapped in. Simple as that. Now let's see how it plays out. I also want you guys to know, be aware of something that I know of. So keep in mind, price is within this higher time frame fair value gap, which is, this new week opening gap is within. So to be careful whenever I'm in a trade, I will close it if it's within a opposing, fair value gap before my target or a order block. If a shift happens, say for example, it goes back into an uptrend and breaks above this high, I will close out the trade. And that's the smartest thing to do. I've realized multiple times that whenever price is within an opposing fair value gap, despite, it being bearish now, And the fact that I'm a scalper, price can always stop you out. So the safest thing to do, if you ever see price change its structure, let me get the arrows. So if price breaks above, right, and then price has a good chance that it continues going upwards and it can probably stop you up. But if that doesn't happen, we just stay in the trade and we let it do what it's supposed to do. So as you can see, price is still pushing down. New lows are being created. We put our close here. If price breaks above this high, we close. If it doesn't, we're still in the trade. And then we see if price continues to push down toward target. As you can see, price is displacing very nicely. Our new close is right here. If price breaks above this high, we close. Price has not as yet to go above, so price will continue going downwards. Nice structure, and then boom, TP hit of $2,000, $3,000 if I recall correctly. But this is a very simple setup. It's a very simple trade, following all the rules that I use for a trade. So we align the bias to the higher time frame. We look for entries when it entered into a PD array. We look for a lower time frame structural shift. We made sure the structural shift was followed with good volume, and then we entered on a pullback to the fair value gap on the lower time frame, and we aim for opposing liquidity. So this was just like, as I stated, in this diagram right here, it went up, tapped in, structural shift with good volume, and then we aimed for sell side liquidity. So boom, simple like that. That's how I really trade. That's one of my most recent trades. I said I haven't traded too much recently, but whenever I do take trades, I always post them on my TikTok stories. I always post them on my IG stories. You can check the highlights. So I send them within the Telegram group whenever I take trades, and I said I send all my trades live in the Discord. I send all my trades in the Discord. Literally, whenever I do take a trade, it's sent right here. I would say, all right, boom, I'm in shorts now. And then I send follow-ups. This trade I stopped out at break even. There was a win right here. I took a win. As you can see, the entry is right here. I say I flipped my bias. This came after a loss. I sent all my entries, literally. Boom, I lost on that one. This was the trade I just showed you a recap of. Yep, right here. I sent every single one of my trades. This was when the market was still bullish, so I took a long. As you can see, it's basically the same bias. Price was in a higher time frame, bullish fair value gap. We had the structural shift after this swing, and then we entered when price broke structure and entered back into a fair value gap. The trade did play out, as I said. Would have played out well if you stayed in it, but I played it the safer route because of the market shift. I explained all that before when market had shifted again, so he was playing the safer route. I literally sent every single one of my trades in live time in this group. TP hit. As I said, if you want to join, you can join. No advertisements. I'd rather you learn from here first rather than, jumping in and say, just trying to get quick riches. Don't do that. You know what I mean? Like, actually learn the skill, because at the end of the day, anything can happen to me. And then if I go and then you don't know what to do and you're just dependent on the next man, you will never succeed in life. You get what I'm saying? So this is basically genuinely my strategy. Literally. It's really simple. This is the only strategy I look for every single day. If I don't see the setup, I don't take a trade. Whenever I see it, I take it. Win and lose, break even, literally. So what I want you guys to do is look on your own charts and apply this. See how it. I've gotten actual good reviews on people actually, testing this strategy on different pairs, and it's worked for them. But I mainly, as I say, I only trade Nasdaq. So Nasdaq 9:30 to midday. Just look for this setup, literally. Just look for a setup, and you can literally make results. This is literally for free right now, literally. This same setup right here, people are probably charging millions of dollars for. Like, literally, don't waste the money. Just apply what I taught you here, and that's basically it. If you hear me, I think this was supposed to be like a short episode. So yeah, all the best. We see you next time.